Bloomberg Audio Studios.
Podcasts, radio, news.
Well, my next guest is Chief Client Officer at Citigroup, a new position which the bank created late last year. Under his previous role as Chief Executive in EMEA, he helped the bank to navigate the pandemic and also led the firm's response to the Russian invasion of Ukraine and sanctions against Moscow. Now, he's a member of the company's executive management team as the Wall Street giant oversees its biggest restructuring in 2 decades. Well, David Livingstone joins us to discuss the UK budget and much more. David, thank you so much for joining us. I know you've been extremely busy over the last couple of years, frankly, with the restructuring, but also with the difficulties that a lot of financial banks have found themselves in. Are you seeing green shoots for deals and anything in the pipeline?
Well, if you're talking about that sort of capital markets and M&A activity, yes, we are. If you look at the beginning of this year, it's been a very, very busy period, particularly in debt capital markets, as treasurers have taken the opportunity of a bit more clarity on interest rates to fund and take advantage of liquidity. And M&A, I think, is after 10 quarters or so of muted activity after the boom of 2021, I think there are green shoots because there's more confidence as corporate leaders look forward and say we can see a path of where inflation and where interest rates will go and perhaps where growth will be.
Are you surprised that actually we haven't seen any more casualties because of the higher interest rates?
Well, need to remember that interest rates are higher but not high, and therefore, in historical terms. And therefore, the ability to manage it really rather depends on how extremely leveraged you were going into this period of raising interest rates. And there's a period of being able to manage through that, particularly taking advantage of people have a lot of hedging in place and other things. So, no, we haven't been sort of surprised, but we've been, I suppose, positively attuned to the resilience in the markets.
David, when you speak to clients and you travel around the world to speak to Citi clients, because of the big restructuring that your chief executive and yourself have put in place, what's the question you get asked the most?
I'll change one word. It's a reorganisation, not a restructuring. Okay. And that's important because really what Jane Fraser has led is what we announced in September is having our structure catch up with our strategy. Our strategy remains the same. We are the world's most international banking organisation, and that remains absolutely the case. But our structure didn't fit the profile of what we wanted to be now, so we've simplified, taken out layers, and put a much greater emphasis, and hence my new role, on delivery to clients.
I know last week was, you were the talk of the town with the fact that you actually have Viz joining from JP Morgan.
Yep.
How will that change things at the bank?
We're very excited about Viz joining. I mean, he's an excellent banker. I'm sure you know him. He's very well respected by clients and for his market insight and judgment. Our banking business is a very significant business for us, and Viz will be in charge of our investment banking, corporate banking, commercial banking activities. And I think it is a statement of our ambition in all of those areas to have someone of Viz's quality and stature. He's attracted by the globality of Citi. He's attracted by the story of what we can do and how we can do more for clients.
Do you know where he'll be based yet? And does that give a signal on where also Citi wants to focus on?
Hopefully on an aeroplane, I think will be Viz's mandate. He will, very international by not only his background but also the business need.
I know you've also bet on Canary Wharf, right, as something that will do quite well in the coming years. Is that an attractive place to be?
I think so. I mean, I think the Canary Wharf Group and Shobi Khan are doing an excellent job on post-pandemic recovery in Canary Wharf. It's not what it used to be, but that's actually a good thing because the retail and services and entertainment side are very strong, and you're seeing a very significant increase in the life sciences and other tenants using the Canary Wharf estate. And for us, it's been our home for 25 years, and it will continue to be so.
David, are your clients banking differently to what they were like, 5-6 years ago because of AI, because of some of the technology, but also, I guess, because of the differentiation in some of the Wall Street banks?
They are banking differently because their business models are changing. So if you look at the effect of digitization, even before you get to blockchain or AI, you're seeing businesses being able to go global much more quickly. So that they can move through their own sort of use of e-commerce into very, very global markets very quickly. So they need a different type of banking services earlier in their development, not only the payments, working capital management, but insight into how to operate in markets before they build their own capability to do so.
So what does that mean? Being closer to your client in different jurisdictions? Does it mean actually hiring in maybe some of the places which is trickier for the clients to know exactly what's going on?
But both of those, but that's the footprint that we already have. So If you look at the opportunities, Middle East is a very good example, Africa, Latin America, they're places where clients are extending not only their own businesses, but also their supply chains. And that's something that we're set up to serve.
We have a big UK budget on Wednesday, probably the most important one for the Tories if they're not going to lose this election. What are you expecting in the budget?
Well, a lot of it has already been, I think, sort of pre-trawled because I think the Chancellor doesn't have very significant degrees of freedom. If you look at the UK budget is £1.2 trillion and the estimates are that he has 20 billion pounds of freedom over the 5-year forecast period. So that's not a great deal of flexibility. So we anticipate there'll be some modest increase in tax take, but also most of that being given back through some relief for around national insurance and also maybe some of the lower tax rate relief. But that's not very significant when you're actually managing a £1.2 trillion budget, and really it's on the spending side where most of our clients would say, well, that's where the reform is needed and that's where more clarity is required by this government or future governments.
Yeah, I was going to ask about the future government. I mean, if you look at the polls, it's very likely that Labour get in. Have you spoken to Labour? Have they come to speak to you? What do your clients worry most about a Labour government?
Our clients are always focused on policy and policy settings. And if you think about the UK, the issues are around competitiveness. Yeah. They're around corporate tax rate. They're about labour productivity. And planning and infrastructure. I mean, they're the issues that our clients in the UK are most focused about, and that's what they engage with government, and I suppose we do too, on those dimensions. I mean, financial services reform has been very, very solid under the current Chancellor, but most of the Mansion House and other initiatives are longer term in their impact. But most of our clients are focused on what's the continued reform agenda in the UK.
What about non-DOMs?
Not that relevant.
It's not something that people are talking about, or it doesn't really make a difference to your client base?
No.
All right. Are you bullish overall about the UK? I mean, there's so much dividing politics elsewhere in the world. I've heard that the UK looks relatively stable compared to other countries, and so does it make it attractive?
Well, you could say from a policy point of view, there isn't necessarily a huge gap between the major parties. But the UK retains all of its attractive features, time zone, language, law, all of those things, but it can't rely on those forever. And therefore, it needs to keep up this pace of structural reform in the economy to get growth back. And I think the distinctive thing in the UK to worry about is labour productivity. I think we're seeing other places in the world recovering faster post-pandemic than the UK has. And that's something that needs to be kept an eye on.
David, you mentioned a couple of times, the fact that Citigroup has a big global footprint.
Yes.
Geographically, where are you most excited about?
The United States, actually. I think the US remains that flexible economy. We've seen the level of recovery. You see it's being translated into stock market valuations. And I think
productivity.
And productivity.
Incredible.
Yeah. We'll see the jobs report later this week. But I think it is. I think that's a market where we still see very significant upside for generally and also for us at Citi.
And this is what animal spirits coming back, also for deals specifically in the US.
It's not just deals. It's that underlying economic activity and vibrancy, which does need financing. It needs the support that the banking system can give it. Yes.
David, thank you so much for joining us today. You'll have to come back really soon. It was a great conversation with
Thanks,
David
Francine.
Livingstone there, the Chief Client Officer at Citigroup.